Hi, this is YR Tech with Wicked Stocks bringing you an update on the Treasury ETFs. This is more of a big picture analysis outlook. I did record this, by the way, on Tuesday, April 5th, 2022. I'll be taking a look at three different ETFs from long-term to near-term Treasury equivalents, if you will. Before I jump into the charts, I just need to plug wickedstocks.com. If you're not a premium member, I invite you to become so. There's a lot going on, a lot of information we're putting out, a lot of video analysis on the Daily SPY, the Daily Triple Q report each and every day, providing timely analysis. We also have a weekly DIA, the Dow Jones Industrial Average ETF, the weekly IWM, the Russell 2000, the weekly Bitcoin report, obviously, Gemini Bitcoin, and two individual premium stock picks a week that do not end up on YouTube and are for premium subscribers only. So there's all that going on, and I'll let you ruminate over that as we look at this Treasury ETF video recorded Tuesday, April 5th. So really the takeaway here, and I'll just let you know, is that all of them, the short term, and I'll get to that at the very end, I'm going to cover the 20-year and then the 7 to 10 year. I'm going to do the TLT first, and then we work our way into the near term. But it is the long-term 20-plus year Treasury ETF, the TLT, that is presently violating, I'm going to call this ultra long-term support. This channel structure goes back some 13 years. It is trend identifying. 129.17 right now, this week, rising 10 cents a week. So next week it'll be 129.27. We're presently trading 128.59. So closing below this formation is a long-term sell signal. Obviously, we've got a longer-term sequence right now coming off those 2020 highs of lower lows, lower highs. That sequence remains firmly intact if we close this week below 129.17. Now, I think, I like to see the 1% violation, but when it comes to some of these Treasury ETFs, 1% violations are significant, thresholds, more so than most stocks. And so, I think merely closing in the 128 handle is a sell signal itself that is actionable. But if you're more methodic and you want to be a little safer, you would wait for the 1% violation this week. Last trade I show is 128.59. We've got a low this week of 128.35. That formation is 129.17. So closing this week at 127.88 or lower would be a clear long-term sell signal. And I guess what I'm saying is even if we close at 128.10 or 128.35, I still think it's actionable. You just want to see ultimately closing below this threshold, this channel bottom by a 1% margin. And that would give you sort of the relief factor to the downside. And what I'm saying here, obviously, is if you're long the TLT, you want to bail on the TLT, in my opinion, if we close below the 129.17 formation. And you could consider buying out of the money puts that don't expire for some time to come. Because I think what may be setting up here is a longer term cycle of higher interest rates. Obviously, that's what everybody is talking about. That has been what's been happening in the real world. But the question, obviously, is this just temporary? Is this inflationary cycle, this higher interest rate cycle? Is it just, through the year and then we back off, we get into a recession or whatever the case might be? But from what I'm seeing, this is sort of a kind of a grand cycle here that could play out for some time to come. My first target, if we do close below this 129.17 formation, would be this descending channel bottom. And I'm going to zoom in here and show you that it is a 109.79 this week. I would say that this could be reached within 2 or 3 months. If we close this week below 129.17 by the 1% margin, certainly for clarity's sake, 109.79, I'm going to call that a 2 to 3 month objective where we could actually bottom out quite easily on a quarterly basis. But and that also lines up to some extent with the 2018 low, which was a significant multi-year low at the time of 111.90. So I think this area is our first objective. That is more the near to mid-term objective. But longer term, I need to create a monthly chart here actually to show everything I'm looking at. I do think the full channel extension, because of the well-defined nature of that 129.17 long-term channel bottom, that yes, 109.79 becomes a 2 to 3 month target. But I really think as we continue over the next year or two, in fact, by the second quarter of 2024, which is about 2 years from now, we have a full channel extension that is presently at 68.27. And by the second quarter of 2024, that all lines up well with the all-time low on this contract, on this ETF, of 80.51 that was posted in 2004. So really, the image you see here, the takeaway here is closing below 129.17, 109.79 expected within 2 or 3 months. And over the next couple of years, I think that 68.27 full channel extension rising ever so gradually into the lower 80s over the next couple of years is the big picture objective. Now, if we were to close above 129.17 this week, or perhaps even inside that 1% zone that I mentioned earlier of 127.88, then then all bets are off, of course, at the downside. We could stabilize and even turn higher, perhaps. But that's not really the purpose of this. Just know that if we do close at or above 129.17 on Friday, April, what is that? Would that be April 11th? Yes, April 11th. Friday, April 11th, closing 129.17 or higher. Then we're merely testing this long-term support, and we can actually stabilize and turn higher. So this is a big pivot point right now, and I'm just prepping you on the possibility of a long-term sell signal that may actually play out this week. Let's move on to the 7 to 10 year Treasury, the iShares ETF, EIF. This is a different time horizon for the Treasuries. It is also violating on an intra-week basis a significant long-term channel bottom that this week is at 105.79, and that is rising 4 cents a week. The 1% violation of that would be 104.73. I show a 105.28 last price with a low so far this week of 105.24. So once again, I think merely closing in the 105 handle is a valid sell signal. And of course, I don't mean to backtrack on my 1% rule, but the distance, the threshold is more apparent here on the 1% violations with these Treasury ETFs. So yes, closing 104.73 or lower on Friday, April 11th is a significant long-term sell signal for the EIF. And I'm going to say even closing in the 105 handle, you should consider the fact that we are likely to continue south anyway. It would be a settlement this week of 105.79 or higher in the EIF. That would be the sort of not so fast factor, if you will, where we're actually merely testing long-term support and may well consolidate and turn higher as we move into later years. So once again, a big long-term pivot point for the iShares 7 to 10 year Treasury bond EIF. If we do close below that 105.79 level by the 1% margin, 104.73 or lower this week. And once again, if we close in the 105 handle, you're not going to have a strong argument from me for playing the short side. The short side here for you would be, A, are you long the EIF now? In which case, if we get that sell signal, I would strongly have you consider liquidating that position if it's a long-term investment. Or you could consider buying out-of-the-money puts that don't expire for a year or two, because I think that is sort of the distance, the time horizon that we're looking at. Our first approach, our first target, following a settlement below 105.79. And once again, I think this is realistically about 2 to 3 months where we could fall into this low area. Actually, you've got the 2008, 2009, 2010 high area. That high mark was 100.38. And then you've got the pullback low in 2018. And that was a multi-year low, I think several years, 99.60. So the 99.60 to 100.38 area, I'm going to call that a 2 to 3 month objective if we close below 105.79 this week. But overall, once again, because of the well-defined nature of this long-term channel, I do think 84.52 is sort of the big picture, I'm going to say likelihood. I was going to say possibility, but I really think that this is likely. As long as we then continue trading below 105.79, I think that we're in a longer term cycle of rising interest rates, the truth is this would just get us back into more of a 100-year norm with interest rates. We've been in a 30-year abnorm, if you will. We've had, abnormally low interest rates for a prolonged period of time. Is this the chickens coming home to roost? You can paint it any way you want to, but I think this is the longer term cycle sort of correcting themselves. 84.52 becomes, I'm going to call that a 2 to 3 year target if we close below 105.79, and that is not altogether different than the lows that we were putting out on this ETF back in 2007, 2008. I don't have those exact numbers. I apologize, but it is consistent. The mid 80s were the low mark on this ETF following its inception about 15 years ago. And finally, I'm just going to finish up with the 1 to 3 year Treasury bond, the iShares ETF SHY. We've been in a sell signal this week as well. I'm not zooming in here. I'm just letting you know that we did not close below this formation yet. Also a significant violation. And I could give you the 1% mark, but it's really not even worth it. We are so below this area right now. I think this especially, the 1% threshold, by the way, would take you into the 82 handle. And we've got 83.02 as a low this week. So technically, no. But this is a perfect example of how a 1% violation of that channel bottom is clearly below that channel bottom. So I'm just going to give you the raw number. 83.3182. If we close below it this week in the SHY, it also enters a significant sell cycle. It doesn't look like a 2 to 3 year cycle for this particular ETF. I think you're looking at about a 3 to 5 month bearish continuation to 81.52, which is an extreme channel bottom that just may well contain annual selling pressures. Now, as time plays out, closing below 83.31 may well yield sort of the upper 70s, which is that low area from 2004, as we continue over the next year or two. But for right now, I think these are good levels. Now, I'll also say that if we rally into the later week and close at or above 83.3182 in the SHY, then this is just an intra-week violation of long-term support. And once again, this ETF could start carving out a consolidative framework and even recover nicely into the later second quarter. But right now, it appears as if it is setting up for a significant sell signal that could play out through the second quarter and into later year. And I think that pretty much covers it for the... This is just a brief update on what's going on with regard to these iShares ETFs. If you have other ETFs you'd like me to look at with regard to the Treasury interest rate equation, I'd be happy to at least take a look. And if I see something worth reporting on, I'll probably create a video on it. So your input would be appreciated if that's something that you watch on a regular basis. That's really all I've got. I invite you to become a wickedstocks.com member. Even if you're not a premium member, you could become a basic member, and you'll be emailed whenever these new videos are put out. And that'll give you, if you don't visit YouTube often, you can set your notifications to, being notified whenever we post new videos. But, we don't, if you become a basic member of wickedstocks.com, I'll just let you know that we do not fill your inbox with a litany of marketing emails. That is just not our style. I've belonged to other services over the past, and I get annoyed when I get 1, 2, 3 emails a day from them. I just think that's ridiculous. So you may get an occasional marketing email from us, but really what you're getting from us is good information as a basic member. And that is all I've got for this particular Wicked Stocks video analysis for Tuesday, April 5th. You have a great day.
The daily video you just watched will require a paid subscription to wickedstocks.com beginning Tuesday, March 1st. Become a wickedstocks.com premium member to continue receiving our daily SPY report, our daily Triple Q report, our weekly DIA, IWM, and Bitcoin reports. Monthly subscriptions start at $25 a month. If you're not ready to become a premium member, I encourage you to become a basic member for free, which will alert you once these analysis videos become part of our paid subscription plan on March 1st. We will continue to offer free and valuable content on YouTube, though it will not include the series of videos mentioned earlier. We hope you become a wickedstocks.com premium member. We offer a 7-day free trial, and cancellation is allowed at any time.